So, welcome to the Wealth Challenge, where our goal is to teach at least 1,000 ordinary people how to perform mutual funds and the best unit trusts and pension funds and retirement annuities and 401k funds and superannuation funds and you name it. In other words, all these register fund managers with at least 1,000% over the next 5 years. And that's the goal. Now, the question that I'm getting from people is, but Hannes, how on earth are you going to do it? Well, very simple. We're going to apply the Wealth Creator strategy. Right, I'll get into the Wealth Creator strategy just a little bit later. But because this is going to be an international game, the way that we're going to do it, we're going to play this in dollars. In other words, the baseline that we're going to use is dollars for the simple fact that it's the reserve currency, and therefore it's going to make it easy to compare the outcome of the different even countries. In other words, this is an international challenge that I'm doing. So it's for our Aussie friends and those in New Zealand and in the United Kingdom and in Europe and Canada, as well as in America. We're looking for the best fund managers, and then I say that at least that includes myself as well as 1,000 of my students will outperform those managers by at least 1,000%. Okay, so it's a big challenge. The way that we're going to do it is simply, we're not going to make it complicated. We're going to use return on investment. In other words, we're going to measure whatever we've put into the fund versus what we're going to get out. If you should liquidate that fund or surrender that fund at a specific time. And it can be in any intervals from a month to 5 years. We're going to measure that, and that is how we're going to determine who's going to outperform. There will be some bragging rights. If you can outperform those the best funds, we're going to name you, and it's just a game. So don't worry, it's not serious. The game has got two parts to it. The first one is experience points. In other words, that is the education, because I believe that we've been fed a lie and we need to teach the truth, and that truth will set us free, so to speak. And then the second game is where we're going to measure the growth points. In other words, that is the real growth, the return on investment. And that return on investment is basically based on the risk versus the growth and the difference between that, and that is expressed then as growth. And we believe that the higher your competency levels, the higher the growth you'll be able to get. So let me quickly give you a definition of the Wealth Creator strategy. Very simple. It's based on universal principles. It's the intelligent use of limited resources to go from where you are to where you want to be in the shortest possible time with the least amount of risk. And the emphasis is on risk, because as a wealth creator, we do not take any risk, and we don't like risk. This story that the higher the risk, the higher the growth, makes no sense to us, and you're going to see during this challenge why I say so. Now, of course, the Wealth Creators strategy is based on universal investment principles. So what on earth is a principle? A principle is a fundamental truth or a proposition that serves as the foundation for a system of beliefs or behaviors, or for a chain of reasoning. Now, the question is, what do we want to achieve with this specific challenge? Well, what I want to do is I want to disrupt the financial services industry, and specifically the investment industry that is based on, like I've said, mutual funds and unit trust and pension funds and provident funds and retirement annuities and superannuation and 401ks, all of those funds, because I believe that those funds do not serve us the way that we think. And the reason why we think it serves us is simply because of this propaganda machine that they've got. There's advertisements to let us believe that they know better than what the average and ordinary person knows. Let me give you a quick breakdown as a little bit of a background. The insurance industry in the United States started, I think it was in 52. Benjamin Franklin started that. I've actually got his book, A Brilliant Person. That is, what's it, 270 years. Here in South Africa, Old Mutual is the oldest insurance company, and I think they are something like 175 years old. The stock market, the modern stock market, the way that we understand it today, started in Amsterdam about 418 years ago. And the mutual funds in the United States, as an example, started, I think it was in 1924. So that is it's about 96 years ago. In South Africa, Old Mutual started their first fund in 1966. So that gives us 54 years. And the reason why I'm telling you, I think originally when they started with this financial services industry was really to serve people. But unfortunately, throughout time, you're going to find, let me give you a background of Old Mutual, the insurance. It was a mutual fund, and then they turned that into a company. So I think that happens with most businesses. The original owner started that, and he had high expectations, and he really wanted to serve and added value. But as it starts to become a business, the newer generation that comes in, especially the CEOs and the presidents of that company, that the incentive changes, and the incentives become profit. And the moment that they start chasing profits, they do not keep the original idea intact. And that is where the problem starts. In other words, they feel nothing for you as long as they can make a profit, because their pay depends on the bonuses that they are going to receive, and therefore that is the only thing that they do, and they will do everything in their power in order to manage the biggest possible fund, even if they lose money on your behalf. But they're going to position themselves in such a way that they themselves do not lose. So if they can indoctrinate you to hand your money over to them, thinking that you are going to get rich and hoping that you are going to get rich, you are in for a massive, massive surprise. And this is what I want to do. In other words, I'm saying that these people are busy dumbing down the population when it comes to financial advice and financial literacy. The same with the education. It's not in the interest of the financial institutions or the educational system or even the political parties around the world for you to understand the truth. Because the moment that you understand the truth is going to set you free. And this is what they don't want, because you can only control and manage poor people. But in order to keep them poor, you can't make them think for themselves. In other words, you have to condition them to believe this lie, whatever you're going to tell them. So according to me, their whole investment strategy is based on a lie. And that's what I want to prove during this challenge. So what do we want to achieve? What do I want to achieve? I want to go out and I want to disrupt the whole investment industry, especially the industry that is based on the mutual funds and unit trust here in South Africa, or pension funds, or endowment funds, or retirement annuities, or superannuation, or 401ks. That's what I want to do, because they are busy lying to us, and we've bought into that lie, and because of that we stay poor. Now the way to spread a lie is very, very simple. If you tell the lie enough times and you get people to get degrees based on that lie, then everyone is going to think that, but this is the truth, and it's not. So how on earth can you get a normal person? Now, when I'm referring to a normal person, I'm referring to a person that has got no financial background or necessary financial background, or a person that hasn't got any degree of financial, because I believe that the educational system is in cahoots on this whole thing. How can you get a person like that, or a person that's never been good at maths, or that don't like to do calculations or sums? You know, they don't like it, or they're not good at it, or they haven't got a talent for that. How can you get a person like that? Perhaps a person that hasn't got any, he did not even pass high school or a matric. How can you get a person like that to outperform the best fund managers with all their degrees and all their experience and all of that? How? That's the question. And it's very simple. You tell them the truth, and you let them play a game where they play the game based on the truth, and not that is based on a lie. Okay? Because that truth, and the truth, by the way, is very, very simple, because you can measure the results. And the person with the best results, that's going to be the winner. Now, we are playing in order to win. What do I mean with that? Each and every person that plays, that's going to be educated through this truth system, the wealth creator system, right? That person will have a win in terms of, if they know how to outperform the best fund manager, I think we can call that a win. And that is what we do. And then, of course, we can play games against each other. You can invite your friends and you can say, okay, let's get experience points, and that's going to add up. Or let's go for the growth points if you want to compare yourself to your friends. Because I know that we are going to outperform these fund managers. Or you can select a fund out of all the funds that are available and say, okay, because there's two parts. There's the practical, the real, and then there's a paper asset. So the paper asset, you can nominate whoever you want to nominate. If you think that you're a good stock picker, or you're a good unit trust picker, or you're a good advisor, or a financial planner, or a stockbroker, or let's call it a financial broker, then pick the best funds that you think will outperform. And then our job as the rest of the team is going to be to make sure that we outperform that best one that you are busy picking with at least 1,000%. Okay, so the end result is going to be based on results. Now, what's the first principle or the first truth that I want to do? And that is that it's only results that matter. So at the Wealth Creators University, that's our motto. It's only results that matter. You know, there's a lot of people that's very clever. They're going to come in and say, yeah, but you can't work on return on investment. You have to bring in the time value of money. And then is it going to be compounded interest, or simple interest, nominal interest, effective interest? Is it going to be based on your internal rate of return? Or is it going to be based, you have to base it on the net present value in terms of your IRR or the modified IRR? And all of that is just to confuse people, because the truth is the growth stays the growth, and the one with the highest growth, that is a person that's going to win. So there's no weird stuff about this whole thing. We don't have to bring in time as well as inflation. All of that stuff is just there to confuse the average person and to try to make it very, very complicated. And if you want to play their game according to their way and get their degrees, I promise you it's very, very complicated. It's not easy. And that is why there are so few qualified and certified, for example, financial planners or financial advisors in the world. So we say it's only the sum. And the reason why I say this, there's a philosopher, Descartes, that basically said he wanted to find out the truth. And he found out that of all the things in the world, if you break it down, the only thing that does not lie at the end of the day will be maths, or the calculation, or a sum, because 1 + 1 always stays 2. And if you get 100% and another person on the same principle over the same period of time with the same amount of risk gets, for example, 10%, then the one with 100% is a better has got better competency or skills than the person with the 10%. So you can't argue against the truth. So let's get into a practical example. So if you invest $1,000, that's your risk, that's your principal or your investment. At 15% in a year's time, it is $1,150. It simply means that you've made a profit of $150. If another person or a company invests the same $1,000 at exactly the same time, but in a different fund, and in a year from now on, their growth is 165%, it simply means that they will have $2,650. That means the profit is $1,650. Now, if you deduct the 150 from the 1,650, you're going to get 1,500. And if you divide the 1,500 by 150, you're going to find that that represents 1,000%. So it's not really that difficult in order to outperform it. Now, of course, if we start bringing in time value, so a year from now and 2 years from now on, then those values are going to stack up. And that 165% versus the, let's call it the 15%, that difference is because of skills. So what's a principle? As I've said before, a principle is basically a fundamental truth that serves as a foundation for a system or beliefs. So let's tackle the first one. And I really want, now we're going to start off with this principle, the truth. And then we're going to start building arguments around this. And I want you to participate and play with me. So the first thing that I want to do is to say that it's the risk that's going to kill us. Okay? So if something does not work out, the amount of money, the principle that you've put in, the monthly investment or the lump sum that you've invested out of your pocket or on behalf of your company, that is what is at risk. So the first principle is that if you do not invest, you cannot lose money. It sounds so simple, but that is the truth. In other words, if you do not invest, you cannot, irrespective of if it's a scam or if it's the best investment in the world or if it's a pyramid scheme, or if you do not invest in that scheme, there's no ways that you can lose money. Right, first one. So that simply means that if you invest less than the next person in exactly the same thing, you stand a chance to lose, if things go wrong, less. So the less you invest, the less you can lose. Let me give you an example. So if you invest $1,000 and another person invests in the same, exactly the same fund than what you are investing, he invests $10,000. Then surely if that fund does not perform or went bankrupt, then the person that invested $10,000 is going to lose $9,000 more than the person that invested only $1,000. Therefore, we can easily say that the person that invested only $1,000 versus the $10,000 is taking a lot less risk, right? So we're talking in terms of financial risk. This means that financial risk simply means the amount of money that you stand to lose. In other words, if you can lose money, the amount of money that you're going to lose, that becomes your risk. And that means that the less you invest, the smaller the risk. Does that make sense? Okay, so the less you invest, the smaller the risk. Therefore, we can say that risk is your ability or the possibility or the probability to lose capital. But there's another way that we can define risk, and this is perhaps broader, but I like this, and this is what Warren Buffett is saying. He says, risk is when you do not know what you are doing. Okay, so the moment that you do not know, that is not the perception, this is the truth. In other words, the perception is you may think that you know what you're doing, but the truth is, and it will show always in terms of the return that you're going to get if you know what you are doing. So if we take that, there's a terminology that I've coined, and that is confoculation. Now, what is confoculation? Confoculation is a mental state of mind when you do not know that you don't know that you're supposed to know. Now, you're supposed to know that the moment that you split risk from growth, the moment that you do that, you're out of the game, and you cannot control that anymore. Now, this is exactly what happens if you take your money and you give it to an advisor or to a fund, or the advisor punts it with a fund. You are taking always all of the risk. Have you got it? In other words, I work for my money. Now I take my money and I give it to company A, which has got a fund manager, and 90% of the time I'm going to work through an intermediary or an advisor or a financial planner or a broker. All right. So the moment that I do that, and that person is picking a fund or a selection of funds that he's going to put my money in, the moment that I do that, I'm taking all the risk because I've split the risk from the growth at that moment in time. And therefore, by implication, I do not know what I'm doing. In other words, I cannot be the investor if I do that. I trust someone else to be able to make me rich. And that has never worked, and that will never work in your life. And that is the reason why I say, those people, the moment that you do that, I know that you do not know what you're doing. You may say, yeah, honest, but I've checked the funds and I've looked at the funds. All of those funds are based on the same principle. It's based on a lie. And the lie is to get your money, to manage your money. That's where they make their money from. They've got no skin in the game, my friend. The advisor has got no skin in the game. The financial institution has got no skin in the game. There's only upside for them. There's never ever downside. And the sooner we understand that, the better it's going to be for us. Okay? And therefore we are confoculated because we think we know what we're doing. And they make it very, very complicated so that we trust that we know what we're doing, but we've got no idea. So the more knowledgeable you are, the more competent you become, the smaller the risk will always be. Just by understanding this, and you say, okay, but this is a risk, right? And I always take 100% risk. The moment that you've got that, things are going to become easy for you. So here's the trick. What if I've got the competency and I can start bringing the risk down? The moment that I start bringing the risk down, but we get the same outcome, the same result, guess what? My growth will go up. In other words, this that they say that the higher the risk, the higher the growth, that is nonsense. Because it's the truth for them, because you depart from your money. Therefore, you are taking all the risk. And irrespective of what they do, you've got a very, very high risk. But the moment that you take control and the moment that you learn, because you have to learn these skills, you're not born with it. So the moment that you learn these skills and you can bring the risk down, in other words, the amount of money that you take out of your pocket or out of your company in order to invest, the moment that that happens, your risk becomes smaller. And if you get the same outcome, your growth will go up. That is a basic truth. Right, so the lower the risk, the higher the growth, which is directly opposite to what you've been led to believe, that the higher the risk, the higher the growth. So what is another principle? The principle is that growth, therefore, measures competency. Okay, so the higher the competency, the more growth you're going to get, simply because you know how to mitigate the risk, how to bring the risk down. And therefore, you have to take risk always into consideration whenever you measure the growth. And that's why we work on return on investment over a period of time. Now, what is a competency? A competency is three factors that comes together. First of all, applied knowledge, which you have to gain. Right? And you have to apply it. It's to have information means nothing. To know that that company is doing that growth and get that growth, and that means nothing. You must be able to do it yourself. And then the second thing is applied skills, and skills you get through and by doing. And the third one is by gaining the experience. And those three are going to give you the competency, and the competency is going to give you the outcome in terms of the growth over risk. So the person with the highest investment competency will always outperform a person that has got a lower competency. Not degrees, not charm, not good words and great words, and not great arguments. That is the outcome. And the way to do that is simply, there's a formula, the formula for riches. I'll get to the formula for riches as well at a later stage. The formula is basically the steps that you have to follow based on this broad strategy, the wealth creator strategy. We'll get to that later on as well. Very, very easy principles and concepts, by the way. Okay, so that is like a recipe. It's a science. Now, what on earth is a science? A science is if you do certain things in a certain way to get a certain outcome, you are busy with the science. And that is the reason why I can predict beforehand what the outcome is going to be. Because the formula for riches is based on science. It is not based on a lottery. It's not based on maybe I'm lucky. It's not based I'm giving my money to someone else in the hope that they're going to pick the right fund. I saw the other day here in South Africa, there's currently, in terms of, we call it unit trust. In America, it's called mutual funds. There's currently 1,624 mutual funds or unit trust in South Africa. I'm not talking about America. It will be chaos over there. Now, what do you think are the chances that the person that's giving you the advice is going to pick the best performer for the next year, 2 years, 3 years, 4 years, and 5 years in a row? Or the best month, 2 months, 3 months, 4 months, year? It's a zero, my friend. It's a zero, because I've looked at this stuff. The one fund gives you 114%. The best fund here in South Africa, that, by the way, was based on gold, on international gold. Right, that fund is 114%. But if you look at a 3-year, you're going to find that this fund is coming down, and over a 5-year, it's less than 25%. But if you look over the last year, last month, you're going to find that it's in the negative. So there's no science to it. It's just pure luck in terms of how these people, they get degrees that is not based on any science, that is not based on any certainty. And what we want in our lives is, of course, certainties. And that is why I've said that we as wealth creators, I can predict that I and my students can outperform any fund manager with at least 1,000%. That simply means that we are in control of our destiny. We control our financial outcome in terms of business as well as in terms of the investments that we make. And this is why this is so powerful, to learn these skills. Now, let me show you in real world. I'm using dollars and I'm not going to use huge numbers, and it's just for try to explain certain things. So we've said that the person with the highest competency or highest skill will always get the highest growth. So let's go and have a look. If you invest $1,000 and it becomes $2,000 in a certain time, a year or 5 years, by the way, if it's 5 years, it's more or less 15% compounded growth. That means that you've made a profit of $1,000. You take the $1,000, divide by the risk, the principal of $1,000, and that gives you 100% growth. So it's the profit divided by the risk percentage, and that is 100%. What if you've got higher skills and you can only invest $100 instead of $1,000, but you also get an outcome of $2,000? That means your profit is $1,900. Now, $1,900 divided by $100 immediately gives you a growth of 1,900%. Can you see where I'm going with this? In other words, by having the competency, the skills, your growth goes up, not the profit. The profit also go up compared to the amount of risk that you take. And that's why we use the return on investment. But what about this one? What about if you invest only $1? So you've got serious competency. You invest $1 in total, right? And you also get, at the end of the term, that investment is $2,000. That means the profit is $1,999. If you take the $1,999 and you divide it by $1, it means that your growth is $199,900. And this is why we as wealth creators can and will always outperform the best fund managers, because they've got all these rules and regulations and they can't use the right strategy. They use the normal strategy, the conventional strategy. We use the wealth creator strategy, which is intelligent use. In other words, we think. We do not go by what other people say. We do not go, we think for ourselves, and we take the responsibility to learn that. So what's the next truth? The next truth that we need to think about is, there's a saying that says, if it's to be, it's up to me. In other words, you have to do it yourself. You cannot give this over to someone else, because the moment, as I've said, the moment that you do that, you break the formula for riches. You break that growth that you can get, because that growth and the risk and the management of that is, you are not in control of that anymore. Right. So if you do not want to take responsibility to learn the skills that you need in order to get 1,000% more and outperform the best fund managers in the world, then this is not going to be for you. But you can still play. Here's how you're going to play. You simply nominate the fund. You don't have to do the educational part. You can skip that. Just name that fund that you know that is going to give us a go for our money. And then we compare that at any intervals that you would like. A year, 6 months, 2 years, 5 years, whatever. Right? Based on real growth, not based on hypothetical. This is real growth, and this is how we are going to play this game. This is the most powerful education game in the world. It's also the most powerful financial investment education that you'll ever receive in your life. And I think it's time that we start and learn and take the responsibility to learn this for ourselves. Now, what's the next principle that I want you to get? Because this is new, and because we as wealth creators do not take any risk, the next principle is simply this. You always start small, but you think big. In other words, as your competency grow, this is the way that you're going to start growing bigger and bigger. You do not start with $1 million or $10 million or even $1,000 unless you know what it is that you are doing. So you always start small, and then you grow. But you think big, because I'm thinking in terms of 1,000,000% growth over the next couple of months or the next couple of years. That's what I think. And by proving to myself that I can do that, I'm building my confidence. And the more confidence I've got, the more skills I've got, the better the growth that I'm going to get on that investment. Now, there's something crucial that we need to understand as well, which is also a fundamental principle that I want to talk about quickly. And that is that there's not a single person on this planet Earth that is born an investor or a wealth creator or a business owner. We have to learn the skills. Now, we've got two choices. We can learn the conventional skills that will not give us the outcome that we wish for, or we can learn a new way of doing that, and that is the wealth creators skills that is based on the wealth creator strategy and the formula for riches. The choice will always be yours, but the outcome will always prove who has got the right, let's call it education. Because I can tell you, and I've gone through that system, the normal educational system when it comes to finances, investment, business is based on a lie. And it's time that we need to understand the truth. So the moment that we can understand the truth and apply it, you'll see the results. And that is what I'm going to get into the wealth creator strategy in the next lesson, where I'm going to explain to you how simple this strategy really is. Okay, so what is the big takeaway that I want you, maybe make it two big takeaways. This is only for people that wants to help themselves and is willing to learn the skills to prove that you can outperform any fund manager in the world. Right, so that's the first takeaway. The second takeaway is that you can learn in a very, very short time to outperform the best fund manager in the world. Remember, the first one, you have to take the responsibility to learn the skills. Secondly, is that by learning the skills that you can outperform. And then in the next lesson, I'm going to get into what is a wealth creator strategy, and we're going to digest that. So thank you for being here. Give me comments, and then I'll see you in the next lesson.